all of these stocks that are in here so that you're fully aware of that. I have owned all of them. I may not own all of them now, but some of them I do own because I've really enjoyed investing in them, and some of them have done very well. There are 3 different classifications. The incubator stocks or discovery incubation, and that's really the small, very small front end of the discovery space. These stocks are usually penny stocks, and after the market fall in the last couple of years, some of these stocks sell for 1 cent, 2 cents, 5 cents, 7 cents. So they're very cheap. So not much downside and a lot of upside. And then once the discovery is made, the stock moves from the incubator phase to the mature discovery phase. And so stocks in here, Quaterra Resources, Oil Sands Quest, Galway, and Endeavour Silver. And I own those stocks as well, and I followed those from the incubator phase to the mature discovery level. They all have discoveries, they all have assets, so they're in the next phase. Now, the key is you'll recognize here there's a lot less risk in these stocks because they've made their discoveries. And the prices are higher too. And then finally, of course, what you really aim for is the legacy. You'd like to buy a stock for pennies that's in the incubator phase, see it make a discovery, become a mature discovery, and then be taken out and go to the legacy phase where the asset actually goes into a large cap company. So in this case, some of the legacy discovery companies that you may decide to invest in are Freeport-McMoRan, BHP, Goldcorp, Archer Daniels Midland, Apple, Cleveland Cliffs. These are not stocks that I own now, but they're examples of how assets could be discovered, incubated, matured, and then bought out. And of course, in that process, if you've been involved with that, you benefit because the wealth comes down to you. So that gives you a pretty good idea of, and what I find is some people enjoy investing at the incubator level. Some people would rather invest at the mature level. But this gives you the opportunity to decide what level you want to come in at in the discovery space. The key thing is, what is the discovery and what kind of wealth are we going to see from that? And finally, and last but not least, the Ultimate Canadian Incubator Fund. Yeah, there's a fund out there that does discovery investing, and it's run by a gentleman that I've come to respect, Tom McNeil, out of Saskatoon, Saskatchewan. It's called the 49 North Resource Fund. And his idea is to open up the Canadian markets, especially the market in Saskatchewan, to resource investors. So some of the stocks in his fund I would classify as in the incubator phase, very early on, very junior stocks. Some of them are mature, and some of them have done very well. This is an opportunity for you, for example, to be able to invest in a fund rather than to buy the individual stocks. I think this gives you a good overview and good probably for a first lecture on what discovery investing is. And what we'll try and do is come back in and talk about specific examples. We'll do some case studies in the next series of lectures so that you can actually put the knowledge that you're learning tonight to use. So thank you very much for your attention.
We are continuing our discussions here with Dr. Michael Barry, who happens to be in town for the tail end of the Cambridge show. You're getting ready to head off on a fishing trip soon.
I am.
That's going to be very exciting. I wanted to ask you, earlier today at the Cambridge show, Greg McCoach was on the podium, and he was talking about the utter disconnect that's happening in the United States right now. He fell short of calling the next shoe to drop civil war. But do you buy into the pretense that we're at the edge of the precipice with the American empire?
That's a difficult question. I think I buy into the notion that we will have a recovery. It will be slow and very, it'll be a tedious recovery, very, very difficult. And I think that whatever we go back to will be substantially a lower level of lifestyle than we've had in the past. So I don't think there's necessarily going to be civil insurrection or disobedience or armed insurrection or anything like that. I don't think we're there yet, but I do think that this has been a game-changing situation for the U.S. economy and for the United States.
You talked earlier in your discovery process for finding stocks that fit your model portfolio. You talked about the 3 stages.
Yeah.
And here in Canada, over the last 5 years, $450 million has gone into the ground in exploration, and there have been no new discoveries. what is the relationship with mining companies at the senior level looking and relying on the juniors for those discoveries? Is there a disconnect there?
I'm not sure it's a disconnect. I think that the senior mining companies, you know, the Freeports and the BHPs and the RTZs and so on, they tend to, I use a slang term, they tend to eat their young. In other words, they look at this pipeline, they look at what might be coming up the pipeline, and they buy them out. A good example was one that I worked on called Western Silver, which was taken out by Glamis. We discovered a lot of silver and a lot of gold in Mexico. That was taken out by Glamis, and Glamis in turn in the same year was taken out by Goldcorp. And so we all ended up with stock in Goldcorp, basically. So the good ones, the really good world-class assets, and you're absolutely right, there are very few of those discoveries made, which is why you have to diversify in this space. But they get taken out by the big boys.
There is a saying in Vancouver, nothing ventured, nothing gained. The money that it takes to be a public company, do you feel over the next 18 months there is going to be a purging of the TSE and the TSX Venture Exchange?
I think that's a good statement. I think it's probably a true statement.
A necessary evil?
Yeah, I think so. You know, we have between 2001 and 2000 and let's just say to December of 2007 or maybe even July of 2008, we had a tremendous run up in the Toronto Exchange, in the commodity sector itself. And a lot of these companies were really hurt, especially the little companies were hurt by the credit crisis in the U.S., and it went around the world very quickly. Asset prices fell, commodity prices fell, housing prices fell, everybody got hurt. So I think there'll be a pretty good shakeout. But that presents an opportunity because a lot of the properties that are now being held by companies that aren't strong are going to be available. So what happens is you winnow down the crop of junior explorers and you end up with a lot of good things out there that people will ultimately come back in and invest in.
You are a behavioral strategist, but your background as a multi-cap wearer from a lot of different jurisdictions in terms of mindsets and education. You were a former fund manager. If you could just identify for our audience, what is the PhD in?
PhD is in financial economics from Arizona State University. And I have a bachelor's degree in mathematics from the University of Waterloo in Waterloo, Ontario. So it was natural for me in the 70s. All of finance was very, very mathematical in orientation. And so I've actually gone through the process of being a mathematician and then a financial economist with modeling expertise. And then I work with a lot of psychologists who really know how to do investing. So, you know, I switched over into the behavioral field, and the behavioral part of investing is even more powerful and more important than the mathematical part.
I'm going to ask you to do something special for me, and that is pick one greatest invention of the last 20 years. And it can't be duct tape.
One greatest invention. Well, I'd call it a discovery. I think in general, I'll give you a general, and then I'll try and go to specific. But generally, I think the work that's being done in gene technology is going to be the greatest invention in the last century, maybe in the last 5 centuries. We're understanding how genes work and how cells work. But if I had to pick one that's now in play, in 1973, I worked for Honeywell in computers. I was newly out of school. They sent me to MIT, and I worked on the ARPANET. The ARPANET eventually became the Internet. Mm-hmm. I'd have to say, in my experience, of something that, that is probably the greatest invention. It's been the most productive invention of the last 20 or 30 years.
When you come back and complete Series 2 with us sit down at this table, back in the 80s, Tears for Fears wrote a song called Advice for the Young at Heart. Are you going to come back and give us some more advice for the young investors?
I'd love to.
All right.
I'd love to do that. Okay.
Our guest has been Dr. Michael Barry, and this is Mining Interactive.